Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike York, and happy Friday. It's Friday, January 31st. Hope you guys are having a great day and have some great upcoming plans for the weekend. I'm sure a lot of will be around, like a lot of us will be watching the Super Bowl this Sunday, so may the best team win. We got a lot of data to go over today. Today happens to be kind of a packed full of data, so let's kind of take a look here. We'll start with the Employment Cost Index for the fourth quarter. This used to be Mr. Greenspan's favorite uh, gauge of inflation, and as you can see here, the previous report came out at 0.7% increase in the third quarter, and forecast for Q4 was zero point 0.7, and came in expectations. So we're still seeing employment costs increasing. Now we got personal income for the month of December, so we see a 0.4% increase of personal income in November. However, December is supposed to slide a little bit down a little bit further at 0.3, and it came down a little bit less at 0.2%. So we'll kind of see if this is going to be something that continues, or you know, if it becomes more of a trend, or if it looks like it could be just a 1 month type of thing. On the other hand, we got consumer spending. So we had a 0.4% in November, 0.3% forecast, and came in expectations. So people are spending obviously a little bit more than what they made in December, according to the charts here. And that's to be expected because we had the holidays right there, which people tend to spend a bit more. Um, Now we get into the Fed's favorite gauge for inflation, which is the PCE, or personal consumption expenditure. This is what they call the headline number. So we had a 0.1% increase back in November. Forecast was calling for 0.1%, and it went up 0.3% in the month of December. However, its year over year only went up 0.1%, going from 0.5% to 1.6%. Now, when you strip out the food and energy, which are variables that we cannot control, we get what they call the core PCE month of December. And this is what the Fed will look at, and this is what we hear for our real inflation data here. So month over month, we had back in November, it grew 0.1%. Forecast is calling for 0.1%, and it grew by 0.2%. However, its core, uh, its year over year remained unchanged at 1.6%. Now the Fed's target rate is at 2%, so that's what we're kind of watching for. But right now it's still a little bit below. So this basically tells us that inflation is pretty much mute, that we're still in the safe haven, so to speak, that things aren't getting out of control. Now, manufacturing in the Chicago region, the Chicago PMI, anything below 50 is contraction. So as you can see here, we're already in contraction period at 48.9 in November, and it worsened in December at the 42.9. But last but not least, we got the month of January consumer sentiment. We had 99.3 on our last report, and so forecast is calling for it to dip a little bit down to 99.1. It actually increased to 99.8. So people are feeling a little bit better here at the end of the month here. So let's take a look here at the headline news. Stocks are down again. Now, yesterday it started the day off down, but rebounded and ended up in positive territory. It actually had a pretty sharp rebound. It was down like over 200, the Dow, and ended up closing up over 100. Now, the coronavirus World Health Organization, basically they did meet and declared it a emergency, health emergency. So this kind of will hopefully help things out, and hopefully we can get this virus contained and help China out, and as well as any other countries that may have been affected with this, and keep it from spreading much further. Now we are still getting a bunch of Q4 corporate earnings, but of course the big news is the coronavirus, which is kind of dragging the stock market down today. Now, this chart here is a little bit off today for some reason. We're actually closer right around this level here. We closed the day actually right at we were way up here for the most of the day. We had a pretty good pricing here. We ended up closing at no change for the day here because with the improvement in the stock market, that took money back out of the bond market back into the stock market. So we ended up closing down here. So this looks like we would be down for the day, but we're actually up for the day. So we're up about 102. We closed at 102.11, and we're right now about 102.23. So we're about in the same pricing where we were yesterday, even though we closed. We're better where we closed at, but we're kind of about the same where we opened, where we were at yesterday, same time. So pricing remains unchanged, even though we're up about 12 basis points right now here. Here's the yields. Same thing with the yields. Yields would have been back a little bit further. Yields were closed at 101.58 and right around this range here. And then right now we're at 101.53, so that's down about 5 basis points right now. So again, this is kind of sorry for the charts here, but unfortunately they're having a system glitch, I think, and just it's not representing it as well. Okay, you guys have a great rest of your day. Thanks so much for watching. However, if you guys are in California looking to buy or refinance, please reach out. We are loan officers. We can help you guys out here and help plan for your scenario, what you're looking for. You can direct message me or email me. My information's down in the red on this program, and we'll look forward to hearing from you guys. Otherwise, enjoy your weekend, and we'll look forward to seeing you in the next video on Monday. Take care. Bye-bye.